afternoon, ladies and gentlemen. The time is almost 1:20. Today is the 23rd of March. And what an intense Wednesday. So making money on Wednesdays isn't as relaxed as it used to be some time back. The market is making you work very hard. And today, unless you had a bearish view, you would not have made money, or at least you would have gone into some kind of negative and then probably come into the green. It was a tricky day because you had these massive gamma explosion moves on the put options, and there really wasn't too much that one could do to manage that, except like taking an early exit or converting the view into a bearish view. So what ended up happening is first half I managed all right. Second half I just had to give up to the gamma expansion and exit at the worst possible point. So around 12:35 from even a risked off position, I covered this position at close to 53 rupees. Now this position, after a little bit of just holding off, has come down in price almost by 10 points. So this happens. The thing is, I can't just hold on to the position and wait for it to come back to break even or green. Right now, once again, it's one of those days where you take a loss and then market will show you that had you held on to your position, it'll come back into the profit. But till what point will you hold it is the real question. So yeah, it just happens that today was one of those days. Let me go into exactly what the trade was and where things really went wrong today. So first of all, we closed yesterday with this tremendous short covering up move, huge strength in Reliance and the IT sector. And this morning also, Reliance opened gap up. First 30 minutes, every 5-minute candle was green. There was a lot of strength. And what one would have thought is that, okay, 17,500, there's a lot of OI there. And yesterday's close should be a good amount of trading range. But that wasn't the case. We had a very clear downtrend with this one very sharp pullback, and after that, just steady down. So where did my trade initiate? So because we're opening closer to 17,500, and that is leading to this huge fall off in put side premium, I don't want to have a neutral delta. I want to have a slightly negative delta. So what did I do? I took much more credit from my call side. You can see my entry position. I'm selling the 17,600 call for 40 plus, and I'm selling the 17,100 put for 20, because in case there's a down move, I want the delta of my position to protect me, because in case there's a down move anyway, there'll be a cooling off of IV on the call side, but at the same time puts might gain a lot. So that's the idea. So in a way, this is a bearish positioning when I'm selling 42 rupees call and 20 rupees put option. But after a couple of few ticks and looking at the strength in Reliance, my idea is I don't want to have such a large difference between the two. So instead, let me sell the 17,600 call and 17,200 put, where the call still has 30% more premium than what is there in the put side. So this is my entry. And after that, the first phase was all right. This entire phase was all right. The position was in green till we broke yesterday's close. Now, when we broke yesterday's close, my idea was, okay, let me keep a minor stop loss, just 2 points below cost, in order to get out. But that didn't hit, and we went back up, and my position was in a good 6-7 points green. And after that, the second time when we were headed to break yesterday's low, this candle I exited. This particular candle I exited, but I exited with massive slippage. So you see, this is where I buy back my position. And I started buying this for about 57, 58, and finally I ended up buying at 63 also. So when I placed the order, the price I was looking at was closer to 55. So literally, I'm placing my exit order. I'm looking at 1 lakh market in the green, and by the time it's done executing, it's down to 15,000. Now that that has happened, what I then decide to do is short this particular 17,000 and 17,600 strangle for about 42 rupees, 42 rupees. And here my thought process is that, look, there has been an IV increase. Calls have not given up much value because people have recent memory of yesterday where you make a down move for the entire day, and then you have this massive bounce that you breach the day's high with, which is why potentially being a Wednesday, there is something to gain in this from a cool off in IV. But that wasn't the case at all, because we had this extremely strong down move where these puts expanded much faster than you could react. My idea was keep a 2 point stop loss, and in a single candle, it blew up from 20 to, yeah, so around here, these blew up very quickly from at this point, 20 to about 35. And then finally, I had to take the exit once this candle formed, around 12:30. This particular candle formed, because the max risk I was willing to take was also not more than 7-8 points, and that was being met. So took the exit here, absolutely worst possible point. And yeah, finally now that's the end of the day. So we'll have to look at the expiry tomorrow, see what opportunities are there, anything that can be capitalized on or not. But yeah, definitely one of those days where I got played and took an unnecessary hit wherein I should have exited earlier. That being said, I hope you had a good trading day. I hope things were much better off for you. I will catch you tomorrow for the expiry. Take care. Have a good one. Bye.